Hey there! Today we're diving into one of the most important topics you can explore for your future: how to invest for beginners in 2025. I know if you're watching this, you've probably felt overwhelmed by the notion that investing is complex or only meant for people with mountains of cash. But what if I told you that with the right plan and approach, you can build wealth steadily, even if you're just starting out? In the next 25 minutes, we're going to break down investing into clear, simple steps, bust some common myths, and reveal how modern technology, from robo-advisors to AI-powered tools, is changing the game, making investing accessible and manageable for everyone. Before we get any deeper, let's set the stage with a few essential points. This video is all about demystifying investing for beginners in 2025. Many people believe that investing is a risky, complicated art reserved only for the wealthy or experts. The contrarian perspective I bring today is that investing follows clear, reliable principles that anyone can master. You can trust the advice you're about to hear because it's backed by years of financial insights, practical experience, and proven strategies. I have a step-by-step plan that will show you exactly how to start investing successfully, build confidence in your decisions, and ultimately set yourself up for financial success. Now, let's jump in. Imagine being able to turn your hard-earned money into a tool that works for you, even while you sleep. That's the power of investing. It's not about quick riches, but about consistent, cumulative gains over time. Think of your money as a seed. When planted early and nurtured properly, it grows and multiplies. Investing takes that seed and helps it grow into a strong tree that provides shade, fruits, and security. Investing is the engine behind financial freedom. Not only does it help you beat inflation, but it creates an opportunity for you to generate passive income. Over time, even modest investments can transform into a substantial financial cushion that supports you when you need it most, be it for a comfortable retirement, funding a passion project, or securing a future education for your children. The key is to start early, remain consistent, and let the magic of compound interest work in your favor. As Benjamin Franklin famously said, an investment in knowledge pays the best interest. In today's video, you'll gain the practical insights and simple strategies that will empower you to put your money to work. Whether you're curious about stocks, bonds, cryptocurrencies, or the emerging trends like fractional investing and ESG funds, the approach remains the same. Plan, diversify, and stay patient. There isn't a need to chase after every hot tip on social media. Instead, focus on building a solid foundation. Let's address some misconceptions right off the bat. A lot of beginners think that investing is synonymous with gambling. They worry about huge risks, market crashes, and endless complexities. Sure, there are risks, but they can be managed effectively with a disciplined strategy. Most of the anxiety surrounding investing comes from a few myths. You might have heard that you need thousands of dollars to start investing. Thanks to innovations like fractional shares, you can begin with as little as $5. The idea that investing is only for the elite is simply not true in 2025. Another popular belief is that successful investing requires you to be a stock market wizard who can predict every twist and turn. The reality is that most seasoned investors rely on regular, disciplined contributions and diversification, not on timing the market perfectly. And finally, many say that investing is only about picking the right stocks or constantly trying to outsmart the market. While stock selection is important, the real secret lies in consistency, diversification, and having a long-term vision. Instead of becoming a victim of market volatility, a well-planned investment strategy can provide stability and growth over time. Let's also remember that investing is not about fancy financial jargon or proprietary secrets. It's about applying time-tested principles, much like following a recipe. All it takes is understanding the basics, establishing a goal, and committing to a strategy. Now, here's where things get exciting. While many believe that you have to beat the market by taking enormous risks, the contrarian truth is that building wealth is more of a science than an art. There's a formula behind successful investing that's been tried and tested over decades. Imagine a scenario where you follow a methodical approach, setting clear goals, doing thorough research, and then automating as much of the process as possible. This isn't just wishful thinking, it's a strategy that experts and professionals alike rely on. In 2025, advanced tools like robo-advisors and AI-driven platforms have leveled the playing field by providing you with personalized advice, automatic rebalancing, and risk assessment features that remove much of the guesswork from investing. The exciting part is that technology is doing a lot of the heavy lifting for you. Whether it's analyzing market trends, monitoring portfolio performance, or suggesting diversifications across asset classes, these tools make the entire process far less intimidating. All you really need to do is start and commit to your long-term plan. In other words, rather than obsessing over every market dip or surge, you focus on disciplined investing, trusting that over time, your consistency and willingness to learn will transform your financial landscape. You may be asking, why should I believe what you're saying? Well, I've spent countless hours studying market trends, long-term investment strategies, and the evolving landscape that technology is bringing to investing in 2025. My insights come from a blend of academic research, practical experiences, and real-world success stories that echo the fundamental truths of cash flow and wealth building. Throughout my journey, I've seen firsthand how simple principles like diversification, patience, and strategic planning lead to substantial rewards. By adhering to these fundamentals, I've helped many beginners avoid common pitfalls and set themselves on a trajectory toward financial independence. This isn't about hot stock tips or secret tricks. It's a disciplined approach that has been proven time and again. So trust the process, trust that you can learn and grow at your own pace, and know that every expert was once a beginner. Today, you have a roadmap that can help you avoid the mistakes of the past and succeed in your own investing journey. Let's break it down into a clear, actionable plan that you can start today. Before you even sign up for an account, ask yourself, what are you investing for? Whether it's saving for retirement, building a down payment for your first home, or creating a rainy day fund, having a clear goal will guide your actions. Knowing your why is the foundation for every financial decision you make. Write down your goals and quantify them if possible. This will help you stay focused and measure your progress. One of the first pillars of sound financial planning is an emergency fund. Set aside 3 to 6 months worth of living expenses in a high-yield savings account before you commit to investing. This cushion protects you during unexpected hardships and prevents you from having to sell investments at an inopportune time. Think of your emergency fund as the safety net that lets you take calculated risks without jeopardizing your day-to-day financial security. Investing isn't a secret club filled with cryptic financial terms. It's about mastering fundamental concepts. Understand what stocks, bonds, mutual funds, and ETFs are. Know the basics of asset allocation and diversification. If you're just starting out, educate yourself by reading reputable sources and listening to expert podcasts or instructional videos. Begin with books like The Little Book of Common Sense Investing or A Random Walk Down Wall Street to build your confidence in the basics. In 2025, fractional investing is a game changer for beginners. You no longer need thousands of dollars to own a piece of a company. With platforms that support fractional shares, you can invest small amounts in big names like Apple, Google, or Amazon without the hefty price tag. This approach allows you to experiment, learn, and build a diversified portfolio gradually. Technology has simplified investing dramatically. Robo-advisors like Betterment, Wealthfront, or similar platforms use algorithms to help you build and manage a diversified portfolio based on your risk tolerance and goals. These tools automatically rebalance your portfolio, ensuring you maintain the right asset allocation. By embracing these digital assistants, you remove a lot of the emotional decision-making and reduce the chance of making impulsive moves during market volatility. Remember the saying, don't put all your eggs in one basket? Diversification is your friend. Spread your investments across various asset classes, stocks, bonds, real estate, and even a bit of cryptocurrency if that interests you. Not every asset will perform the same way under different economic conditions. By diversifying, you reduce risks and increase the chances that some of your investments will perform well even when others lag. Investing is not a get-rich-quick scheme. It's a long-haul journey that rewards patience and discipline. The market will experience ups and downs, and that is perfectly normal. By maintaining a long-term perspective and persisting through short-term volatility, your investments can grow significantly over time. Celebrate small wins, learn from downturns, and always keep your long-term goals in focus. We're living in an era where technology is reshaping nearly every aspect of our lives, and investing is no exception. Let's talk about a few cutting-edge trends making investing more accessible than ever before. Artificial intelligence and robo-advisors. AI-powered investment platforms now analyze massive amounts of data in real time to offer you tailored investment strategies. They can anticipate trends, adjust portfolios, and even alert you to potential opportunities. This level of automation takes the guesswork out of investing and ensures you're making informed decisions without needing a finance degree. ESG and sustainable investing. More and more investors are seeking to make money while also making the world a better place. ESG investing allows you to support companies that are environmentally responsible, socially conscious, and well governed. This dual benefit not only aligns with ethical values, but helps meet growing consumer demand for sustainable business practices. Even if you're primarily focused on returns, investing in companies that prioritize long-term sustainability can yield competitive results. Fractional shares and micro-investing. In the past, investing in top-tier companies was reserved for those with significant capital. Today, platforms offering fractional shares allow anyone to invest small amounts in big brands. Micro-investing apps also let you invest spare change from everyday purchases, gradually building up your investment portfolio without feeling a drain on your finances. The rise of passive investing. Many successful long-term investors prefer passive strategies such as investing in index funds and ETFs. Rather than trying to beat the market through constant trading, passive investing embraces market averages. This approach has lower fees, lower risk, and over time often outperforms active strategies managed by professionals. By focusing on passively tracking market indices, you can set up a stable investment plan that requires less daily monitoring and emotional decision-making. No journey is without its challenges, and the world of investing has its share of pitfalls. Here are some common mistakes that many beginners make and how you can avoid them. Overreacting to market volatility. One of the biggest mistakes you can make is panicking when the market dips. Market fluctuations are normal, and selling in a panic is often the worst possible decision. Instead, view downturns as opportunities to invest more at lower prices. Stay calm, focus on your long-term goals, and remember that every successful investor has weathered market storms, chasing hot tips and trends. It can be tempting to jump on the bandwagon every time a stock or cryptocurrency is raving about on social media. However, this approach can lead to erratic decisions that may hurt your portfolio. Instead, stick to your well-thought-out strategy and conduct diligent research before making any move. Not every flashy tip is a golden opportunity. Ignoring fees and expenses. Even if you begin with a small investment, fees can add up over time. Be aware of expense ratios, management fees, and trading commissions associated with your investments. It's important to choose platforms that provide transparency and minimize costs, as these expenses can eat into your returns, especially over the long term. Neglecting diversification. Focusing all your investments on one type of asset might seem like a surefire way to yield high returns, but it also exposes you to a high degree of risk. By failing to diversify, you leave yourself vulnerable if that single asset underperforms. Keep your portfolio balanced and spread across various asset classes that complement each other and mitigate overall risk. Not having a clear plan. Sometimes beginners invest without a clear, defined objective. Without a plan, it's all too easy to make emotional decisions that derail your long-term strategy. Write down your investment goals, risk tolerance, and timeline. Review this plan regularly and adjust as necessary based on performance, life changes, and new opportunities. Learning from experience. I've been down this road myself, and trust me, I've made my fair share of mistakes. In the beginning, I chased trends, acted on impulse, and at times panicked during market downturns. Through trial and error, I discovered that a disciplined, study-driven approach not only builds wealth more reliably, but also provides peace of mind. Every setback was a lesson, and today I'm here to share those lessons with you so you can avoid the same pitfalls. Let me share a personal story that I believe will resonate with you. A few years back, I was in a situation not unlike yours, curious about investing but completely overwhelmed by the perceived complexity. I remember sitting in front of my computer, eyes glued to news tickers and fluctuating graphs, feeling as if every decision was a potential disaster waiting to happen. One day, during a particularly rough patch in the market, I decided to streamline things. I took a step back, reassessed my goals, and began reading up on the fundamentals rather than chasing every new trend. I learned about the importance of an emergency fund, the benefits of diversification, and the power of long-term consistency. I started small with fractional shares and began using a robo-advisor to manage my portfolio. Over time, the anxiety gave way to confidence, and what seemed like a daunting field transformed into a manageable, even exciting part of my life. This transformation wasn't instant, and it involved plenty of learning from mistakes. But if there's one takeaway I want to leave you with, it's this. Investing is not reserved for the selected few. It is for anyone willing to take that first brave step, armed with knowledge and a clear plan. In the Bible, Proverbs 21:5 reminds us, "The plans of the diligent lead to profit as surely as haste leads to poverty." That verse speaks volumes about the value of patience, diligence, and thoughtful planning, principles that are every bit as true in investing as they are in life. Before we move deeper into more advanced strategies, I want to take a moment and ask you to do something very important. If you're finding this content valuable, please take a moment, hit that like button. And while you're at it, subscribe to help us reach 1,000 subscribers. Your support not only helps keep this community growing, but also ensures that more people like you can benefit from straightforward, actionable advice. Thank you for being a part of this journey. Now let's circle back to one of the cornerstones of investing, diversification. The idea here is simple but powerful. Don't put all your eggs in one basket. A well-diversified portfolio might include a mix of domestic and international stocks, bonds with varying maturities, real estate investments, and even small portions of alternative assets like cryptocurrencies or commodities. Think of your portfolio like a balanced diet. Just as you wouldn't eat only one food group every day, you wouldn't rely solely on one type of investment to carry you through economic ups and downs. The key is creating a mix that minimizes risk while maximizing potential returns. In practice, this might mean using low-cost index funds to gain broad market exposure, supplementing those with specific ETFs that focus on technology or healthcare, or even considering sustainable investment funds if backing companies that care about the environment is important to you. Don't forget the importance of rebalancing. Over time, some parts of your portfolio may grow faster than others, shifting your original risk profile. Regularly reviewing and rebalancing your investments ensures that you stick to your plan and that no single asset class becomes disproportionately influential. One of the most effective strategies in today's investing landscape is to adopt a passive approach. Passive investing means that instead of constantly buying and selling stocks trying to beat the market, you invest in diversified funds that track index performance. Research has repeatedly shown that passive investing with minimal fees and low turnover often outperforms active trading efforts over the long term. Why is passive investing so compelling? For one, it eliminates a lot of the stress that comes from trying to time the market perfectly. Instead, you trust the inherent growth of the market over time. Another benefit is the cost efficiency. Passive investments typically carry lower fees, which means more of your money stays invested. Platforms that cater to passive strategies make it incredibly easy to set up recurring investments, automate reinvestments, and watch your wealth grow steadily. This approach works best when paired with a long-term mindset. Remind yourself that short-term market fluctuations are just noise. The real picture is painted over decades of consistent, disciplined investing. By focusing on a diversified portfolio of index funds or ETFs, you allow the market's long-term upward trend to take your money forward. Every investment comes with a level of risk, but that risk can be managed through education, preparation, and discipline. Understanding your personal risk tolerance is crucial. Are you comfortable with market volatility, or do you prefer safer, steadier returns? Your risk tolerance should guide your investment choices. One effective way to manage risk is to automate your investing. Setting up automatic contributions takes the emotion out of the equation. You won't be tempted to stop investing when the market looks shaky. Instead, you'll maintain a disciplined, steady investment habit that reinforces long-term growth. Remember, consistency beats sporadic bursts of action any day. Another important risk management strategy is to keep learning. The financial markets and investment tools continue to evolve. Stay updated with reputable financial news sources, attend webinars, or even join discussion groups with like-minded investors. Over time, as your understanding deepens, you'll be more confident in making adjustments that align with your overall plan. Today's tech advances have revolutionized how we manage our finances. Platforms utilizing AI and machine learning help predict market trends, suggest optimal portfolio adjustments, and even educate you on market movements. Embracing these tools doesn't mean you relinquish control. It means you're harnessing technology to bolster your decision-making. For example, many apps now feature intuitive dashboards where you can see your portfolio's performance, break down asset allocation, and receive personalized advice. Some even offer community insights where you can anonymously compare strategies with other beginner investors. This kind of digital community fosters a supportive environment where learning is continuous and questions are welcomed. These resources democratize access to financial wisdom. Once reserved for high-profile hedge funds, the same insights are now at your fingertips. The convergence of technology and investing is one of the best reasons to be optimistic about your financial future in 2025. Investing is as much a psychological journey as it is a financial one. A lot of challenges come from managing your emotions in the face of market ups and downs. Cultivating the mindset of a long-term investor is key. This means embracing patience, being willing to learn from every experience, and understanding that setbacks are only temporary. Think of your investment journey like running a marathon rather than engaging in a sprint. The pace may be slow sometimes, and you might encounter hurdles along the way, but every step, every small decision matters in the long run. Each setback is an opportunity to learn, adjust your strategy, and come back stronger. It's also important to celebrate small milestones. Whether you've made your first investment, seen consistent growth in your portfolio, or simply educated yourself on a new topic, these wins matter. They build your confidence and reinforce your commitment to the long-term path. Let's briefly revisit the major steps we covered today. First, start by clearly defining your investment goals. Then secure an emergency fund. You wouldn't build a house without a solid foundation. Once you have both of those in place, immerse yourself in the fundamentals of investing. Look into fractional shares, automated tools, and strategies that simplify the process. Diversify your portfolio widely, adopt a passive investment strategy if that suits your goals, and always manage risk through discipline and constant learning. Throughout this journey, remember that you're not alone. Every investor, regardless of their success level, has navigated the ups and downs of the market. The key is consistency. Each dollar invested, each lesson learned is a step toward a brighter financial future. As we approach the end of our time together in this video, I want you to remember that every investor started somewhere. The best time to begin was yesterday. The next best time is right now. Don't let the fear of complexity or the myth of needing a huge capital stop you from taking that first action. Start small, keep learning, and trust that the principles we've discussed today will serve as your compass in the exciting world of investing. I also want to share one more thought from Proverbs 21:5. The plans of the diligent lead to profit as surely as haste leads to poverty. This timeless piece of wisdom reminds you that careful planning, patience, and diligent action justly reward you in the long run. It's a powerful reminder to approach investing and life in a wise and measured way. We've covered a lot of ground in today's video, from debunking myths and embracing a contrarian, science-based approach to investing to diving into actionable steps, modern technology, and the mindset required for long-term success. Now it's time for you to take action. Remember these key takeaways. Define your investment objectives and create a solid plan. Secure your financial foundation with an emergency fund before diving into investments. Start small, leveraging modern tools like fractional shares and robo-advisors. Diversify your portfolio consistently and adopt a long-term perspective to ride out market fluctuations. Use digital tools and continuously educate yourself so that every decision is informed and measured. Every investor's journey is unique, and while there will be moments of uncertainty, the combined power of research, discipline, and innovative technology makes this an exciting and promising time to start investing. Before I sign off, I want to reiterate how crucial your engagement is. If you found this video helpful, please take a moment, hit that like button, and make sure to subscribe to help us reach 1,000 subscribers. Your support is what allows us to continue bringing you straightforward and actionable advice for your financial journey. In conclusion, remember that investing is not a race. It is not about overnight success or trying to get rich quick. It's a journey of incremental progress, grounded in the timeless principles of saving, learning, and growing. As you embark on this journey, lean on the proven strategies discussed today and believe in the power of disciplined, long-term investing. Take the first step today. Open an investment account, research your options, and start with a manageable amount. Reflect on your goals, commit to a realistic plan, and be patient. Over time, the combination of your effort and the magic of compound growth will transform your financial future. You now have a roadmap that distills complex investment ideas into simple, actionable steps. Think of today as the day you reclaimed control of your financial destiny. There will be ups and downs along the way, but with diligence and perseverance, every challenge is an opportunity to refine your strategy. As we've highlighted, modern tools and digital platforms have revolutionized investing, making it accessible, intuitive, and even enjoyable for beginners like you. Thank you so much for joining me on this deep dive into investing for beginners in 2025. I'm excited for you to take these insights, implement them in your life, and watch how each small milestone leads to significant growth over time. Your financial future is in your hands, and now is the time to start shaping it. Until next time, keep learning, stay patient, and remember that every great investor started with a single step. Enjoy the journey, and here's to building a secure and prosperous future. There you have it, a comprehensive step-by-step guide on how to invest for beginners in 2025. Whether you're just getting started or looking to refine your investing strategy, these foundational principles and modern tools will help you navigate the financial landscape with confidence and clarity. Happy investing, and I look forward to seeing your success story unfold. See you in the next video.